Welcome to Bears in Exile. Today is February 29th, and this is the market overview, looking at all the stuff we look at every night. So today was finally a decent day for the Bears. The Dow down 53 points, and we were wondering if that above 13K mark was going to be important to get that close out of the way. Not out of the woods yet, but definitely an encouraging day. Bearish engulfing, almost a extra large spinning top. The tail could be a little bit longer to the downside. We did get the downtick today. Now, we've been saying all this time, looking for a downtick, excessive separation, wobble, etc., but no downtick. And so today we got the downtick, and it resolved intraday, just on the dot. So, unfortunately, you could say that this bubble is now fixed because it has done a bubble corrective move. So the question becomes, is it going to go down more? Well, let's take a look. We have the 14-day RSI moving average ticking down, getting below the 80 line finally. At which point it should have acceleration in the price. We have the stochastics pointing down. Hopefully they'll remain pointing down. We have the RSI pointing down. We have the stochastics pointing down. And we've been pointing out all the negative divergences that we've been having for a little while now. We have the MACD ticking down. We had the bearish cross a while back. It just hasn't been reflected in price. We had a downtick in the MACD histogram today, and we've been talking about the negative divergence in those as well. Yes, and those as well. So, encouraging. It doesn't mean that we're going to get the full corrective move at this point. It means that we just had a bubble corrective move, and now we have to see it go down farther. And we're not going to know about that until tomorrow. SPX. And this one also a bearish engulfing. Yes, it is. SPX is also bearish engulfing. And we finally have the downtick. And the downtick is not yet resolved. It's shy of 1360. More like 1359, and down on 14-day RSI moving average, very slightly. Stochastics trying to point down, CCI pointing down, RSI going down, bearish cross on the MACD histogram ticking down. It is encouraging. And it is encouraging that we don't have a completed bubble corrective move yet. So that would suggest that there's more to come. So that's nice. The Nasdaq. Oh yes, very clearly bearish engulfing. We have a downtick. The downtick gives us a target of 29.45. Also nice that we have a downtick and that it hasn't been fulfilled yet. The last downtick did not fulfill itself. It sort of came close, but not really. And maybe this time we'll actually have a complete bubble corrective move. That's encouraging. Down on the 14-day RSI moving average, stochastics moving in tandem with it. That's good. Down on the CCI, down on the RSI, down on the MACD, down on the MACD histogram. All looking good. We were talking a couple nights ago about confluence, that we want confluence with all of the indicators and the candle agreeing that a down move is, in the cards, that it's likely. Certainly, we need the CCI to go down more. We need the 14-day RSI moving average to get below the 80, along with the stochastics. But at this moment, it is encouraging, and we do have negative divergence, just like on the Dow, and it's encouraging. The VIX. Let's see if we can get any confirmation. And yeah, it doesn't look bad at all. It's a big fat body spinning top. And we had the uptick from back here resolve immediately. Now it's been resolved with a green bar instead of reds, but not that that matters. We still have the middle Bollinger Band above the candle, which is not a good sign. We are not above 19 yet, which is a really good indication of what this is going to be doing. That is the lower price consensus level, and it is also the beginning of the bearish bar, which is massively strong. 14-day RSI moving average ticking up. Stochastics, now we didn't have this last night, they were mixed. Tonight we have both of them pointing up, CCI pointing up, RSI going sideways, bullish cross on the MACD, and MACD histogram ticking up slightly. So this is encouraging. Very nice. TNA. Oh yeah, this is very nice. Look at that nice big red candle breaking the previous floor. Very important. And almost reaching the long-term moving average bar, which is bullish. And we're already getting a little bit of crossover in the short-term moving averages. Very nice. We are getting below the middle Bollinger Band. Very nice. And we were talking about the Bollinger Bands clinching, and that normally you have a good move afterwards. And at this point, because it was a range, we didn't know if it would be to the upside or to the downside. And now it does appear that it is to the downside. A test of the 200-day moving average would be extremely nice. It will probably clock in at 55, and actually it'll be a little bit lower than that by the time it gets there, if it gets there. 14-day RSI moving average ticking down. Last night it was mixed. Now we have both of the stochastics ticking down, CCI ticking down, RSI ticking down, MACD ticking down, and the MACD histogram ticking down. We have just a really good sign that it's time, at least for a correction of some depth. Very nice. XOI, when oil is bullish, the market is bullish. The talking heads like to say, oh, oil's going down, that's good for the market. Look at that. Big red candle today. Downtick, finally. Downtick resolved intraday. That's a warning sign. That means we have to see what happens next. 14-day RSI moving average still ticking up. Also a warning sign. Stochastics ticking down. CCI ticking down. RSI ticking down. Getting the bearish cross on the MACD. MACD histogram ticking down. Overall, very nice looking. We need to see the 14-day RSI moving average roll over. And we need to see further downside after this bubble corrective move. So just to sum up, it's not a done deal yet, but it is very encouraging. How about Apple? Most important stock out there at the moment. Yep, everything being down, Apple doesn't care, goes up anyway, ends with a doji star, almost a spinning top. Outside of the upper Bollinger Band, we still have wobble, we still have excessive separation. We still have the 14-day RSI moving average ticking up. The stochastics are mixed. CCI is still ticking up. RSI is ticking sideways. MACD is ticking up. MACD histogram is ticking up. So this, just by itself, could be a warning sign. And but it is outside the upper Bollinger Band. It should have a down move or a side move to get back inside of it. And at least that would be good for helping the corrective move. But 542 and a half almost. That's amazing. When this does decide to go down for a bar retest, I think that will be very negative for the market. And this is an indecision candle. But we simply do not know at this point, and certainly the secondaries and the primaries are not saying that it's going to turn around at this moment. So something to keep in mind. We also have the upcoming iPad 3 announcement, still days away, that can keep this sucker up. So Apple is not agreeing with everything else. GE, get a better read on the Dow. Look at that. We're still in this sideways range bound environment, but it is bearish engulfing. It is a fat body spinning top. It is attempting to get below the middle Bollinger Band. It is not far away from the major price consensus level. It closed below the upper price consensus level today. The 14-day RSI moving average ticked down yesterday. It ticked sideways, and we didn't know what exactly that would mean, but it did tick down today. That's nice. Stochastics pointing down, CCI pointing sideways, RSI ticking down, MACD ticking down, MACD histogram ticking down. Overall, not bad, and definitely not exactly good for the Dow, but it's not like it's breaking down from a sideways range like the Dow seems to be. So not perfect. It is what it is. XLF, the banks. Yeah, this is either a spinning top or it's a inverse hammer. But it'd be nicer if it was a shooting star, but it's not. Bearish engulfing. We have a downtick. Downtick gives us a target of 1468. Not far from where it is. 14-day RSI moving average ticking down. Stochastics are mixed. Sideways on the CCI, down on the RSI, down on the MACD, and down on the MACD histogram. It is encouraging, and we do have a little ways to go for the downtick to resolve itself with bubble corrective move. Hopefully that will resolve itself. Notice the clinched Bollinger Bands. Not bad. If we do have the financials fall apart, then hey, that could easily be the instigator for everything else to follow suit. So between oil, the Dow, the banks, if they were all to cascade, very good for the bears. UUP, oh baby, look at that. We were saying last night about the test of the 200-day moving average, getting down to it, and wouldn't you know it, opening right at it. Yes, it did dip below it and bounced right up, giving us an uptick. Uptick resolved intraday, so that is all fixed. And we still have a ways to go before the middle Bollinger Band, and fortunately the bearish bar is not strong, so we could have a rebound. 14-day RSI moving average ticking up, not getting above the oversold level yet. Stochastics pointing up, CCI pointing up, RSI pointing up, histogram pointing up, MACD pointing up, not yet with the bearish or the bullish cross, I'm sorry. Encouraging, very encouraging. FXE, the euro. Oh, look at that. We were talking about the excessive separation and wobble in FXE. Today getting a nasty red bar, giving us a downtick finally. And the downtick is not yet resolved. Gives us a target of 132.4. Not far from where it is now. Wouldn't be difficult to resolve itself. We don't have a strong bullish bar. We have essentially a flat line long-term moving average bar. We're still far away from the upper price consensus level. 14-day RSI moving average though ticking down. Stochastics joining it for the trip down. CCI ticking down, RSI ticking down, MACD ticking down, MACD histogram ticking down. This is very encouraging. GLD, our second VIX. Holy cow, what happened here? This is extremely strange to me. I'm not exactly sure why it has done this. We've talked about the push-pull between fear and the dollar. The dollar did go up today. And fear went up today. And somehow the dollar just won in an extreme fashion, getting far below the middle Bollinger Band, clicking down on the 14-day RSI moving average, clicking down on the stochastics, the CCI, the RSI, bearish cross on the MACD, down on the MACD histogram. That is just amazing. Breaking the previous floor that we have in this little sideways range very significantly. I kind of think that that's overdone. Actually, I'm pretty darn sure it's overdone, but I don't really have an explanation for that. SLV, more of the same, getting below the 200-day moving average, getting a downtick, resolving it intraday, and then some, clicking down on the 14-day RSI moving average still, stochastics following suit, CCI, RSI, MACD histogram, and MACD clicking down, no bearish cross on the MACD yet. Very, very extreme. Oof. So I guess this is just the push-pull that we've talked about, and for whatever reason the dollar is winning at the moment. I would expect that to reverse itself as the VIX gets higher, but maybe it just has gone too far, too fast, and it needs to do that. But anyways, I guess long and short of it is a very encouraging day. We need to see follow through tomorrow, and hopefully we will. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.